in just 15 hours. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, while investors are betting big on a Republican sweep, is the unthinkable about to happen? I'm going to show you what's going to impact markets starting Monday morning. And are Chinese equities about to come crashing down? This is one chart setup that you've got to see it to believe it. And while everyone believes that inflation and deficits are about to soar, as I'm about to find out, the bond market says the exact opposite's coming. And if you like gold, we're going to show you a chart setup you're going to like even more. Plus, there's a commodity chart setup we want to show you that we think this is on the cusp of soaring higher. And speaking of soaring higher, we'd like to welcome Lithium to our show as our sponsor today. You can find them on the NASDAQ under symbol ATLX. They're a leading lithium explorer and development company, and their stock right now is in the early phases of a swing trade. You may remember we featured a company, their stock was going into a swing trade and jumped 60% in the 3 days after we featured them. We'll show you why we think Lithium could soar as much as 27%. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Goldman, where we picked today's story up as U.S. insiders selling soars to a 3-year high. And this is a crazy headline because right now investors believe that stocks are going to do nothing but go up. And yet what we're hearing from the experts now is that insiders are aggressively exiting. And of course, we know that insiders have access to, of course, all the company data, and they like to get out at the top. They're really good at that. But check this out. At a time when stocks have no shortage of buyers, even formerly bearish hedge funds capitulate and unleash the biggest buying spree of stocks since 2021. This is joining retail investors and record buybacks that are all helping propel U.S. stocks to the 6th straight week. U.S. company insiders are dumping in near record amounts, and this goes against everything that investors believe, because if stocks were really truly going a lot higher here, insiders, they would be looking to add. If nothing else, they would not want to sell here. And Bloomberg notes while business leaders were busy last week offering reassuring earnings guidance, underneath the rosy outlook was a different trend. They were selling stock, which has traditionally been a major red flag, and these are the people who best know the inner workings of their companies and sales. And here you can see corporate insiders are cashing out, and in a big way, at a level we haven't seen since 2021. And this is dangerous because, again, executives and officers are unloading shares. They know there's big changes coming from the economy, and yet investors are buying big on, of course, the outcome of the election. What we know historically is the election doesn't change consumer spending, but that's the hope. What we're seeing from insiders is there's going to be no change. In fact, it could get a lot worse. And granted, some of the exits no doubt have to do with the business outlook, driven instead by the need for cash to buy a house or pay kids' tuition. And the stock rally has been mostly invulnerable for months amid Federal Reserve interest rate cuts and generally good tidings on the economy and earnings. Still, the last time the insider indicator shot up in July, it was a precursor of market pain, with the S&P 500 subsequently falling 8%. And could that happen again? Well, we're going to look at some charts here because we've talked about how retail investors are all in. They're not just in a little way, they're going very aggressively in a speculative fashion. We'll show you that in a moment. But when we look at machine positioning, well, they're very long the market here. As Goldman notes that their CTAs are modeled along 114 billion of global equities, and over the next week they're marginal buyers and even slightly net sellers of the S&P 500. But over the next month they are buyers of global equities here, but they're already near extreme long positions. But look at investor behavior here, because we see non-dealer U.S. equity future positioning. This is speculative. This is people betting that the market's not just going to go up, that they're betting it's going to go up a significantly large amount because they're buying futures or bets on where the direction of the market is headed. You can see this is off the charts. We haven't seen anything like this in ages, which is setting up for a potential big correction in the equity market. But something else we see is going to soar higher. That is the stock for our sponsor for today's show, Lithium. You can find them on the NASDAQ under the symbol ATLX. And I want to show you the swing trade. This is when you get a full candlestick close over the 9-day moving average. You see it happen right here. The stock is rallying, and we think it's going to jump up here around 27%. We'll show you the rest of the charts later in the show, but you can see the last 3 swing trades had big returns for investors, and again, we think another 27% upside. Check out all the information in the pinned comment and description below. Now let's turn to Bank of America's global research, because they're saying the price is right. And look at the election reinforcing the Wall Street conviction trades right now. People are long gold on inflation and populism, yet as I'm about to show you, the bond market is suggesting the exact opposite is coming. We see investors are long tech, short treasuries. Well, that could be a really dangerous move, and short China. That's actually a trade that I'm going to show you I believe is spot on, and everything else is a rent until payrolls start to decrease, and then we see, of course, a major change unless the election doesn't go how people believe. But right now, it's a GOP sweep, and that's what the market's betting on. You see that is former President Trump back in the White House, Republicans taking both the House and the Senate. Odds right now, they're saying are 34%, a split Congress at 32%. Virtually markets saying there's no chance of a Harris win, then that could shake things up in a big way. As we look at the B of A bull and bear indicator, seeing at 6.4, remember when it gets to 8, it's saying that's a sell signal. Right now, it continues to nudge higher, saying the market is in extreme position here. And what do we hear from Goldman? They're saying don't go all in yet, because there could be a post-election hangover. We're going to show you what that could look like, because they're arguing the risk-reward scenario right now doesn't make sense, and nobody should go for broke. But yet what we see in the futures positioning is people are indeed going for broke. Let's take a look at our screens here. As we note, the momentum on the S&P 500 is positive. We've got a relative strength index, or RSI, above 40. That's currently at 56. Suggesting momentum is positive. The MACD has been oscillating back and forth. Currently, it's got a negative cross. But one thing we note is our Momentum Timer Pro, which takes these momentum signals, aggregates them together with a proprietary overlay, has 33 consecutive daily buy signals. But the danger is on a 1, 3, and 6 month window, we're maxed out on momentum. And that rarely happens. What it suggests is a reversal is coming. And you know, our machine position, this is our CTA Timer Pro. When we model those machines to give you the edge, you see we're not at max long, suggesting there could be a further pullback. And on our slow algorithm, we see the max long. If you're looking to beat the machines or get an edge on momentum, check out the links in the description below. We've made some big updates to our programs. We're putting some big trades in your pocket. You've got to take advantage of that, because let's take a look at the S&P 500. If you're looking for a trade, this may not be where you want to be, because we go back to the bottom here back in February and March of 2020. What happened? You get this big long move up, and then eventually you get a pullback. But remember, nobody thought the market was going to come down at this phase. Here we are once again, a long trend rally and no significant pullback at extreme momentum. It's a dangerous signal here. Let's take a look at the weekly chart and see the momentum still pushing overbought territory, and yet investors can't get enough of this. The bond market saying something else is about to happen, because what's coming for markets starting on Monday is the end of the corporate share buyback blackout window. We note that that means those who have reported can start buying their stock back. Those two report, we've only got several weeks to go for that, some big companies, but keep in mind this could be a big increase in insider selling, because they know the economy is shifting. We've been warning, but now let's take a look at the Invesco QQQ Trust or tech stocks. We see momentum's positive. It's been oscillating between buy and sell signals here. Momentum is fairly stretched. You know, we don't have a position in the major U.S. equity markets for good reason. We think there's opportunity elsewhere. Upside target back to the all-time high. Downside target down to 482. Let's take a look at the QQQ here, because the S&P 500, the likely pullback here is around the 50-day or 100-day moving average, with major support at 543. How about tech stocks? You've got a lot of support from retail investors at 482. You've got the 100-day moving average. But again, you're talking about something that has gone on a very long stretch without a major downturn. That is the risk to this market right now. The investors believe it can only go up, and they're betting big on that. The problem is when that happens, well, it means stocks are usually at some point going to head the opposite direction. And right now, according to B of A, that investors are dumping small caps, buying into big caps, and that's typically a sign that as we get into the late of the year, investors sell the losers, buy into the winners, and you see an even more concentrated market. Of course, it's a dangerous sign. Let's take a look at IWM here. We see momentum is negative, RSI slowing down to 48, MACD's got a negative cross, even though momentum timer pro flagging 3 consecutive daily sell signals, but it's coming off an extreme 1 month move. Downside target, we're revising lower here to 213 as we hit our downside target last week. Let's take a look at IWM here. And what do we see? A setup that is dangerous. We see one top got rejected, another top rejected, another top rejected, another one. And right now, close of Friday, is holding support at 6-month volume profile. It breaks below that. You're looking at all the way down here to around 207, where the first move to the 100-day moving average. But if you want to talk about a chart that says things are coming down and in a big way, let's take a look at the iShares China large cap. This is symbol FXI. Momentum is negative. The RSI is slowing down to 52. The MACD's got a negative cross. We've got 9 consecutive daily sell signals on this. We're revising our upside target up a little bit. I'm a little shocked we hit that. Our downside target still holding at 29.28. Look at our machine positioning here. You see a 15% short position building on the fast algorithm. You see momentum swinging down. You want to know when to buy these things? We're going to tell you, but I'll suggest this. It is not a buying opportunity. If you're looking to get the edge on trading, hit those links in the description below. While you're there, check out Atlas Lithium on the NASDAQ and the symbol ATLX, because what you see in this chart is very interesting. It's called an island gap. And what you see right here is the stock was trading and then it gapped up and then it gapped back down. It formed an island up here. This is a reversal pattern, but normally there was a gap up here and a gap here, suggesting there's a second island right here. And all this is setting up is, yes, there's another gap that we could see a gap down in Chinese equities and then another gap down eventually all the way down here to 26.51. Talk about invalidating that stimulus trade. That would be wild. And speaking of things the market doesn't see coming, it doesn't see disinflation in the cards, but yet the bond market is saying that's exactly what's coming. Let's take a look at TLT here. Momentum's negative. Now remember, this is one of those that we've not traded with a stop loss. We've told you you should always use them, but if you don't, use the signals to dollar cost average in. We recently went from a plus back down to a minus. We're down about 2% on that trade with our cost basis at 94. I've lowered the upside target to 93.97. And let's take a look at machine positioning, because we have max short. Now, if you want to know when to trade bonds, we look for a reversal in this. Now, our subscribers are set to take advantage of that in a big way. Not to mention, we've integrated the full backtest data into the reports. So when we do see a change in machine positioning, we automatically look at the backtest data and we tell you if it's high probability trade. You don't want to miss out on a big turn in the bond market. And look at momentum. We got a sell max, 26 consecutive daily sell signals, and this, when this flips as well, our subscribers on Momentum Timer Pro are going to be alerted as well. Here's the best part. You can get a 30-day free trial for both, because look at this, relative strength index at 31. MACD, negative cross. Everything's setting up for a potential reversal here, one that we believe could be very profitable, because again, nobody's seen this coming. But look at this. You see this pullback off the supply zone. Now, we said this was going to happen. And what do we noted? On the back of a potential Republican sweep, investors have gotten aggressive by shorting the long bond, and yet buyers have stepped in right here. You see momentum on the RSI at oversold. You see the MACD oversold, and what this is setting up a reversal with a volume profile at 94.27. So you get a reversal off this point, and you get a break of 94.27, and next thing you know, you've got upside potential right back to the recent high at 164. We'll let you know, of course, if you're a subscriber, when you should take advantage of this trade. But let's talk about gold here, because if you're bullish on gold, I'm going to show you a better chart setup. And right now, gold is sitting right near its all-time highs. Machine positioning is long, momentum is long, it's oversold in every way. What you should be looking at is gold miners or GDX. Now, you might remember, if you're a subscriber, we put a trade on miners, but we didn't show it on the show. It was on the juniors on GDXJ. We're still holding that trade. Let's take a look at what's going on here. RSI cooled off a little bit to 54. MACD's still got a positive cross. We've got 11 consecutive daily buy signals here. Upside targets unchanged, but look, machine positioning is long, as well as momentum. But one thing that hasn't changed is investors' appetite to drive gold prices higher. Let's take a look at GDS, because if you're bullish on gold, well, we think, of course, there's a bigger opportunity in the miners. Let's zoom out to the 5-year chart here, and we see that a potential further rally in gold will send GDX all the way up near its all-time highs at 45.78. Right now, we're seeing a little bit of a pullback here off of a top. If it holds support, as we've seen on this move higher, it pulls back and rallies, pulls back and rallies. If this is just a short-term pullback, you could see GDX go make a run as all-time highs. We think that's a better setup return for you than in gold. But talking about opportunities, let's first look at the dollar here. This has surged higher. Surprisingly, we haven't seen anything in the financial system break. Well, at least not yet. Momentum remains positive. The relative strength index and MACD said massive overbuying here of the dollar as investors, yet who believe there's going to be debasement in the currency depending on the outcome of the election, are buying up dollars. So something here doesn't make sense, would suggest a impending liquidity crisis could be brewing. We've got 40 consecutive daily buy signals and extreme machine positioning, but if the dollar reverses, this could be a boom for commodities. Let's take a look at soybeans, because this is something I don't have a position on. I'm in soft commodities in another space. I've noted this to my subscribers, but I'm really interested in soybeans as well. We've got 14 consecutive daily sell signals. We have a buy it open that came on board a couple of days ago. We've seen a pullback of 1.82%. Hasn't really changed much, because look at the short-term positioning on the machines. We see max short, we see momentum. Very much a negative here on the short-term basis. Let's take a look at this chart setup, because this is very interesting. You're looking for a quick potential trade. You want to be watching soybeans, or you want to be a subscriber. We'll tell you when to take this trade, because here you can see we bought in on this candlestick here. It got rejected, pulled back in support. And right now you see the potential double bottom here. Now, if this holds, it breaks up, the first line of resistance is 22.25. You break out from there, you're looking right back up here in the $23 range, setting up a nice potential trade. If you want to know when to do that, sign up for our subscriptions. Again, you get a 30-day free trial, and we've got a 9-day moving average starting to bottom out here. But if you're looking to jump on and swing trade that's already in the process, we'll look no further than the stock for our sponsor of today's show, Lithium. You can find them on the NASDAQ under symbol ATLX. Everything you need to know in the pinned comment and description below. Let's take a look, because they're a leading lithium explorer and development company. And let's take a look at their stock, because they're backed by some big institutional shareholders such as BlackRock, Fidelity, Invesco, and Citadel. And they've got buy ratings from 3 analysts sitting on this stock. And for good reason. We think this thing's about to swing higher for a 27% return. And they're positioned to become a very low-cost producer. They've got an expedited timeline to production. They're the largest hard rock lithium exploration portfolio in Brazil. They've got strong metallurgical results. Their incentivized management team, as they own 33% of the company, they'd love to see the stock go higher, and they have committed offtake prepayments. Their low-cost production is their key to long-term success, as they hold several promising deposits, one of which is projected to have production costs in the mid $400 per ton range. Brazil's advantages include year-round mining operations, lower labor costs, and a supportive government. And Brazil's lithium industry outperformed Australian producers on cost. And let's take a look at some advances in its Salinas project. And this is located approximately 60 miles north of its flagship Neves project, where the company's initial lithium concentrate production is planned to take place. The Salinas project spans 388 hectares and is situated just 5 miles east of Latin Resources' Colina project, a significant lithium deposit. It is relevant to note that in August 2024, Pilbara Minerals, a major lithium producer, announced it had entered a binding agreement to acquire lithium exploration company Latin Resources for consideration worth approximately $370 million. The company considers its Salinas project a promising lithium-bearing area, and Atlas Lithium believes it's strategically positioned to capitalize on its exposure to 2 significant yet distinct areas in Brazil's Lithium Valley. In the southern region, the company's Neves project offers high-quality, large crystal suitable for open-pit mining and processing into lithium concentrate, a key ingredient in the global supply chain for electric vehicle batteries. The site is poised to become the source of Atlas Lithium's initial production and revenue generation. In the northern part of Lithium Valley, as announced today, Atlas Lithium plans to actively participate in the development of lithium districts surrounding the Salinas municipality. And let's talk about some big investors, as Atlas Lithium secures a $30 million strategic investment and offtake agreements from Mitsui. And the company considers this a strong validation of its project and team. This happened back in March of this year, as Mitsui is purchasing $30 million in common shares of Atlas Lithium at a 10% premium to the 5-day volume weighted average price, and at the same time entering into an offtake agreement for the future purchase of 15,000 tons of lithium concentrate from phase 1 and 60,000 tons per year for 5 years from phase 2 of Atlas Lithium's soon-to-be producing Neves project in Brazil's Lithium Valley. The strategic investment provides Atlas Lithium with the immediately available funds to continue its rapid development toward revenue generation with the production and sale of high-quality, low-cost, environmentally sustainable lithium concentrate. Let's take a look at that swing trade chart again. We have that full candlestick close over the 9-day, beginning the swing trade here. You see it moving higher. The same thing happened. We moved back to the prior one and it surged higher before it hit a blow off top. Once again, we see a nice long swing trade here and early stages. You see the beginning of a swing trade forming, and then it took off. We see this going another 27% higher. Let's take a look at this chart here. Where we see the supply zones is right in that upper zone, 27%. You break through to the other high, you're talking over a potential 30% return, and underneath that, you've got fantastic volume support. This is a 6-month volume profile. You've got rising momentum across the RSI and the MACD, and you've got a fantastic setup that suggests that Atlas Lithium stock could head a whole lot higher. Check them out on the NASDAQ under symbol ATLX. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.